money. Now, the three major points why the market has run up very quickly, and some of you may have missed out completely. One is short covering, okay? Now, I think markets are getting a lot more sophisticated. There are a lot of long-short players, and basically when the market started running in early April, we saw a lot of short covering, hence the market went up very rapidly. The other explanation is, of course, panic buying. Some of the retails guys actually went in when the market went up higher. But I think more importantly, one of the main reasons is also because of the China factor. From beginning of this year, we saw some quite a number of very positive economic data points from China, from bank loans, property sales, which I'll show you on the chart later. This has been the triggering factor. Okay. The next factor, of course, going back, is the US first quarter banking earnings. Now, this is where you have to be very careful, okay? The US market or the banking stocks also rallied, okay? Largely because they announced better than expected earnings. But you have to be careful because if you look at the earnings carefully, the bulk of the earnings improvement actually came from write-backs. And if you look at the provisioning level, quite surprisingly, a lot of the major banks in the first quarter, somehow the provisioning level was not or could have been much higher. Okay, what I do believe is that going forward, that's why the stock market is not going to go up straight smoothly. You will get bumps. Okay, and perhaps in the second or third quarter, you will see some shocking earnings coming out again. And this is where you have to be very careful. Now you can see here very clearly, the first three markets, the pointer's not doing very, I hope you can see it. China, Indonesia, and Taiwan have done extremely well. Okay, up between 35 and 69% for the Shanghai Shenzhen Index. Now compared to Malaysia, right at the bottom here, we're only up about 20%. Okay, so I think the basic message is that, if you're investing, probably good to do some diversification. I think the way markets will behave going forward and in terms of your investment return will be quite different. Okay, now going back, I'm using the MSCI Far East ex-Japan. Okay, this covers 9 countries throughout the Asia Pacific region. You can see clearly here in the last financial crisis, from the bottom to the top, which is on the left-hand side, is gone up 61%. This was the worst recession that we had, and I think a lot of you will probably recall back in 1997-98. The middle one, the green patch, is the US. This is the US recession, and it took almost 20 months for the market. Which came down before it consolidated and went back up. And subsequently, you can see the first rally was about 61%. The second rally was about 55%. And if you go to the far right, it's 62%. So that what that tells me is that, what we've seen, how markets have behaved since early April. We've actually seen very significant gains. And it would not surprise me if we're going to see some pullback. And I'm going to go through some of the reasons why I believe it's healthy for the market to have a meaningful correction. Okay? Now, the question I want to ask is, after the strong performance, is the game over? Okay? My answer to that is no. Okay, I think there's still going to be a couple of catalysts which will still support the market very well, even if it comes down. One is asset rebalancing. Okay, this chart is basically showing you that a lot of foreign funds have actually flowed from 2007 onwards. A lot of funds have actually been taken out of Asia. Now, where has it gone? It's actually gone back to the US. Some have gone back to Europe, okay, back to their home country, okay. But if you look at the green line here, you can see that it's still way below this the levels back here in 07, 08, which means that potentially there can be a lot of foreign funds which may come back to the Asian region. Now, I used to work in London and Singapore. This asset rebalancing is actually very important. The moment they make a decision, I'm going to put more money into Asia, okay, you're going to see huge amount of funds coming into Asia again. So this is something, the asset rebalancing is something you mustn't ignore. This is the cash levels. This is basically telling you in the US a lot of funds on the left-hand side, their money are placed with the money market. Okay, so you can see, it's gone up a lot. Yes, it has come down, which means some of the money have actually been transferred to the equity market. But I think generally, the message is that the cash level is still very high. If you look at the right-hand chart, the absolute amount, you can see there very clearly the amount of cash is still very much in money market funds. The other reason why I think markets, if it comes down the next 1-2 months, why it'll be very well supported is, if you look at global interest rate, not only Malaysia, our OPR rate is about 2%, which is quite low. You look at the US Fed funds rate is, between 0 to 0.25. In Europe, the refinance rate is 1%. And in the top right-hand side, the Japan overnight rate is 0.1. So, with such low rate, it doesn't encourage you to, in a way, save too much. So hopefully, and over time, we'll probably get more funds going back into the equity markets where hopefully the returns are much higher. And, on the chart below, which is the money supply growth, this is actually quite important. This tells you that the government, if you look at all the regional governments and globally, actually they're pumping money. Okay, and hence you will find that in most economies there's still a lot of liquidity in the system. Hence, interest rate will probably remain low. That's what it's telling you.